Canada's home ownership crisis is poised to deepen in the coming years, as pre-sales of new condo projects linger at historically low levels. This hinders the flow of funds needed to begin construction. This is according to insights from multiple economists and real estate agents. In major urban centers like Toronto, pre-construction sales, typically involving 1 or 2 bedroom condominiums, have long been an essential funding tool. Traditionally, a large proportion of these units were purchased by investors for rental purposes. However, home ownership has become increasingly out of reach for many Canadians, especially since housing costs and interest rates began climbing years ago. Despite some recent rate reductions and more lenient mortgage rules, individual buyers rather than investors have struggled to afford property. Some might say it's due to the investors buying up many of the properties that drove up the demand and prices of homes, which caused homes to be out of reach for Canadians. If you think young families are lining up to buy 500 square foot condos, they're not, said the president of Toronto-based Realosophy Realty. No official data tracks these pre-construction sales. Instead, the information is pieced together by realtors and economists from market trends. Investor demand, which previously fueled a construction boom in key cities, has waned due to rising mortgage costs, slower rent increases, and reduced capital appreciation prospects, not to mention people having less money due to inflation. Investor demand has also waned due to the uncertainty about how future interest rate changes or government interventions will impact the market. Generally, developers can secure construction funding once 50 to 70% of a project's units are pre-sold. But with investor interest dwindling, sales may fall short of these critical thresholds, slowing or stopping planned projects. This is expected to limit the supply of new housing, even as demand continues to rise. Demand for housing will keep on rising, prices too, but are Canadian salary increasing? It's the affordability of homes that has been devastating for Canadians, a factor contributing significantly to declining approval ratings for Prime Minister Justin Trudeau. Despite recent government measures aimed at boosting housing construction, including rule changes allowing first-time buyers or new-build purchasers to secure loans with a 30-year amortization rather than 25 years, experts argue these efforts haven't enticed investors or home buyers back into the market. Critics highlight that even with multiple interest rate cuts, the cheapest available mortgage rates, such as 5-year fixed rates, remain high. Adding to the challenges is Toronto's real estate market, where increasing supply has dampened investor hopes for future returns. Although the government is attempting to moderate population growth by restricting immigration, which many think, it's a little too late. RBC housing economist Robert Hogue predicts demand will continue outpacing supply over the next 4 or 5 years. This will sustain the imbalance at the heart of Canada's housing crisis. A report from Canada Mortgage and Housing Corporation showed new condo sales dropped more than 50% in the first half of 2024 compared to the same period last year. Aled Abyorworth, Deputy Chief Economist at CMHC and co-author of the report, noted that many developers currently lack the necessary funding to initiate planned condo projects, making it especially challenging to build large condominium complexes in today's economic climate. Well, thanks for listening. If you like this story, please like and subscribe to receive more.